Well, good morning, everyone. Welcome to our Monday morning trading room. So it looks like the market's open with a little bit of a gap this morning. Just looking at where prices left off here on Friday, this would have been the gap that was caused by the Sunday morning electronic session. And then so far, through the Monday morning session, not a whole lot going on. Kind of sideways here at the moment. I'm not going to jump into anything just yet until I get a better feel for which way the market might be going. It's always tricky first thing in the day. I'm not quite as brave as most, so I'm okay waiting a little bit. All right, so we're falling off here a little bit toward the bottom end of this trading range. We've already produced a sell signal here on the Hawk. That's our first micro macro cross lower. The Falcon also producing a trend change signal. Now that we're into the hard edge of the trading band, I'm going to look for some sort of reaction. All right, so here on the Raptor, we're starting to produce a cloud crossover signal. The cloud's crossing, not fully crossed, but the formation is there. The clouds are trying to cross over. The market is pulled into the clouds. There's the sell signal. Okay, and we've engaged the signal, so I'm going to short it. It looks like I got slipped a couple of ticks. Stops, initial stops should try to be a little bit further away. And, oh, look at that. They're flinching just before the break even. There we go. Trade's down to break even now. Don't stop now. Come on. I know I'm quick with the break even on these trades, darn it. My logic, of course, is that if the market gets about 3/4 of the way to the profit target and doesn't hit the profit target, well, then I may as well take a break-even stop out. But sometimes that might be just a little bit too quick. All right, well, if the cloud crossover is going to continue, I'm going to get another opportunity to get in. Oh, Anthony's looking for a strong uptrend here this morning. He's looking 64.14. That's quite the target. Gotta pick up about 30 points. Well, 50 points from down here, 30 points from the high. Okay, it looks like we're going to get a little bit more of a reaction now to that hard edge. Like I said, whenever we encounter the hard edge, we're always anticipating some sort of reaction. Hey, that's terrific. Rick writes, I found videos on YouTube yesterday on the other 3 trading platforms that you have. It helped me to better understand the foundation and how to better see how the Raptor works. That's great. Thanks for the feedback. All right. Well, now the hawk is kind of drifting here into yellow bars. It's looking like it may want to try to turn over. There has been a lot more volatility than we had seen just a week or so ago. All right, great follow through on that red bar buy here on the Eagle. I don't know if that got to its profit objective yet or not, but it should be pretty close. So we're into the hard edge. We're getting a reaction. We produced a red bar with a buy signal. That tends to be a fairly strong signal on the Eagle. It's also at the bottom end of the trading range, which is encouraging. And it looks like we're almost, or it's almost gotten up to its profit target. Certainly far enough along that if you are in that trade, you might want to consider bringing your stops in a little bit, at least until the market chooses a direction here this morning. It is still early. We're only about 10, 11 minutes into the session. Yeah, good morning, Russell. Russell says, what did I miss? Not a whole heck of a lot just yet. We saw the market make a quick move lower out of the open, and that was probably easiest to capture here on the Hawk with that first micro-macro cross lower. But since then, they've turned on their heels and they're trying to retrace that earlier decline. That first in-sync eagle signal right here is working away, not quite to the profit objective just yet, but very close, certainly close enough that you could either take some open profit, there's about $100 in profit there, or at least, at the very least, bring up your stops, perhaps to a break even. But that's it right now. Just kind of hemming and hawing here. The Raptor, the band is getting a little twisted up here. I tried to short this early cloud crossover, and they came up just a tick or two short of my profit target, so I ended up with a break-even stop out. The Eagle now producing another buy signal. The Raptor actually coming across with a cloud crossover to the upside. So the cloud's out, essentially the cloud's out of sync, cloud's back into sync, the pullback, the market trying to recover the new trend. You do have a chance at a second push opportunity, which I think I would recommend for today right now. Let's see, Russell's asking about the 4-arrow consolidation here on the Hawk. 1, 2, 3. Yeah, I see what you're looking at. Yes, it is a 4-arrow consolidation. It's also a double macro pullback here. So I think we should at least anticipate the market to get to its profit objective. The 4-arrow consolidation is a hawk signal, and it tends to have a flag shape, like a bull flag or bear flag. This morning's gap, however, is to the short side, so I don't know. Is the market going to try to get into that gap? Here come the sellers once again. Okay, so there was a counter trend signal that developed rather quickly there on the Raptor as market is poised to head lower here. Okay, and here on the Hawk, we're also getting a first micro-macro cross signal to the short side. So we've got a couple opportunities. I'm just going to punch into a trade with that, and I got to bring my stops back somewhat. I would have preferred to enter here because it's a little bit further from these lows. I hate entering right at the breakout because, well, that's where the buyers are sitting, right? All right, so here they are again, just sitting above the lows of the morning, trying to get into that gap below the market. It's most obvious here on the Eagle. Good news is we're making lower highs, so that's encouraging for a short. But if this is a sideways trading range, we're going to see selling occur up here, and we're going to see buying occur down here. So the safest play is to actually let the market break out, and then it's going to retest. And at that time, you can look to see that the market will prove to you that it will stay out. You're going to produce a signal here somewhere. Same thing to the upside. It's going to break, it's going to retest, and then it's going to, if it's going to stay out, it's going to prove to you that it can stay out, and it will produce a buy signal. So entering early, as I did, within this trading range, you're taking on a little bit more risk. The trade-off, of course, is that you're into the trade early. The downside is that right now the market is still very, very neutral. And I'm kind of taking a chance that, in fact, the sellers are going to knock the market down here. Oops, there's my Skype. Okay, you Raptor traders, you're getting another cloud crossover. This one is going to be in sync with this number 2 signal, so that might be worth giving a whirl as it pulls into the trading band here toward the hard edge. We're going to look for the market to spit it back out and produce a sell signal. That will be a number 1 signal. And my stop needs to go above this little swing right here. At least initially. It doesn't need to stay there, but you're going to try to avoid strangling your trade right out of the gate. is starting to look more like a sideways trading range, isn't it? The buyers kind of pushing us back toward the middle of the range of today's range. Definitely have some bullishness coming off the bottom end. All right, so the Raptor back into the cloud. The band's not fully crossed, but visually there's enough there that I would consider this a cloud crossover. It may not actually print the #1 signal because sometimes the programming will wait for the hard edges to sync up. We'll see if we get that #1 signal though. There we go. So there's the #1 signal. We've even got a second push opportunity here to short, so you can look to short on a move below that recent low. Nice little reactionary move there. And we'll see whether they try to get back through these lows. Now you can see the profit target just below the low of the day, but I have a feeling if they break through there, we're actually going to try to get all the way down here toward the median line. So I'll try to extend my profit objective a little. Come on. Oh, they're trying hard. Okay, so we're, almost to the break even. Just kissed the break even target. Okay, so we hit the break even, and I just want to, it looks like my hawk trade was all in, all out. That's okay. I thought I had a runner on that one. We'll play the runner out on the eagle trade, or pardon me, the raptor trade. The trade of break even now. We'll see if they won't sneak lower and get down to this next support zone. Yeah, it is a little funny here this morning. Mark says nothing's been clear cut for me yet this morning. A lot of times, you know, the best thing to do is just to wait. Flat is a position. All right, might have lucked out here and ran out that first swing. All right, now I do have a fair amount of open profit here. It would probably be prudent to move into a slightly more aggressive stop, maybe something like the parabolics, which will at least protect some of that. Come on. One more push. Oh, we're so close. Rick's asking, when do we do the rollover to the January 18 contracts? We won't be rolling over until around the middle of December. And we'll be rolling into the March contracts. That'll be the higher volume one. Yeah, Anthony says 12th of December, but Ninja likes to prompt early. I think the well, here, I'll get the expiration dates here for you in a second. And hooray for us, that worked out quite well. 1 second here, and I will find when the NASDAQ contract expires. December the 15th. So yeah, if you roll anytime that week, you'll be all right. Ninja will be prompting you toward the end of this week, but really we have another week worth of trading. Scott's asking, good morning, Eric. Well, good morning, Scott. Got in late this morning. Question, the solid gold line and dotted line, which is which? All right, well, the solid gold line, I am assuming you are referring to this line right here, which is part of the ultimate support and resistance suite. This is the median line. The median line falls right smack dab in the middle of your support and resistance line assortment. So you'll have 10 lines above and 10 lines below. It's also kind of the balancing point where if the market is trading above here, it tends to be a little bit more bullish. If it's trading below here, it tends to be a little bit more bearish. As a rule, these three lines, the median line, the primary resistance, and the primary support, give you the tone for the day. If the market is in here and trades above the primary resistance line, then the market's going to be a little bit more bullish. If it gets below the median line and trades below primary support, then you can probably anticipate the market be a lot more bearish. The eagle. All right. Scott says the eagle has a dotted gold line at 63.80. Oh, you know what I bet you're running, Scott? I bet you've got... Where are you? I bet you've got this on there. Let's try that again. There we go. This is the current day high, low, and open. And that dotted gold line will show you the opening price. Ray Burke was always very keen to know the Globex open. He would avoid trades like this that developed right near the Globex open because he found it to be a little bit of a tipping point. The market would be too neutral for him. Let's go back here another day and take a look at another example. Come on, where's the open? So, you know, again, he would shy away from signals like this because they were close to the open. He would shy away from signals like this because they were close to the open. I don't have that same issue. But again, it boils down to, does this help you make a trading decision? For him, it did. For him, he felt he got burned too many times taking a signal that fell on the opening price. So that's what that other gold line is. For me, I don't pay that much attention to them. And it looks like I could have run my my trade out further still. Wahoo! Look at that go. But I've got a pretty good day going here so far. Yeah, you can, regarding rollover dates, you can do what Mark suggests here. Mark says, I have a market analyzer set up as a rollover guide. And when the volume on the new contract exceeds the volume on the old one, that's when I roll to the new contract. Another shortcut is you can go here to bar chart, barchart.com. They're a pretty useful website, and you can find your market of choice, and you'll get a very quick overview of volume and open interest. And you can see there's some trading going on in the March contract already, but as this gets closer toward the end of the month, these numbers will start to even out. And it's not just the volume number you're interested in. You also want big open interest. Hey, way to go, Floyd. Floyd says, I got out too early also, but I'm happy with my profit. No need to be greedy. I agree. Wow, look at that, though. Fell straight to the support zone. 2 full zones out of that sell signal. Just for giggles and grins here, let's see how far that actually went. So we shorted from up here. Stops were up here. And had I held on for the 2 full zones, that's a moneymaker. So made half that, but that's okay. Like Floyd said, no point in being greedy. Expensive cup of coffee. Mark says, wow, I went to get a cup of coffee and missed that big move. Oh well. Yes, we do tend to miss moves from time to time. The market is in free fall right now. Just one last comment on the rollover. Mark writes, it's not always the same day as the new contract going into effect, but it's within a day generally. We used to, honestly, I don't know why Ninja prompts you to roll over so early. We used to trade it almost up to the expiration date. Because it was still the most liquid. And many times the most volatile as well. Saw the biggest moves. But because Ninja prompts everybody so early, and because I get so many questions, why are you still in the December contract? I've taken to rolling a little earlier. Okay, I think it's pretty safe to say the market's in a downtrend today. We may have to wait a little while for something resembling a retracement here. All the traders that missed this move, a lot of them are going to be looking at fib levels and stuff, and they're going to be saying, well, if the market trades back here to around 63, 45, 46, I'll probably start selling or look for a reason to sell. As you can see, that's quite a ways, though, from where we are here at 63.25. Look for the market to recover 20 points. Other traders will be buying, or pardon me, selling on any uptick. So now that the market is actually ticking higher, they'll start shorting also. All right, well, we did produce a counter trend signal here. I'm not so sure I'd be all that keen on counter trends right now. Given the rather obvious downtrend. Oh, darn it. I looked away for a second there. Here was a hard edge bounce signal. That was definitely worth giving a whirl. And are we going to get a double bottom here? Okay, well, it's looking like it. So this is actually going to be another number 2 signal that's printing right here. Now, the number 2 signal after a number 3 signal tends to have a little bit more follow through. This one did not print because it's a little bit drawn out, but visually you should still be able to spot that as a counter trend signal. Let's see if it got up to find its profit objective. Oops. And almost there. There we go. So there was a doable little counter trend trade. All right, well, we're waiting on that. A couple of comments here. Mark writes, lesson takeaway, the market generally fills gaps. I've been burned in the past, though, by that actually never happening. That's why I'm always leery. I'm leery, too, of opening gaps. And you're correct that many times the market will not fill the gap. So I'll keep a gap in the back of my mind, but I won't always expect it to fill. Rick asks, what does it mean when NinjaTrader says I need at least one data series to open a chart? I have everything set right. One data series. Well, the data series, have you selected a chart? Maybe that's what it's looking for. So you need to find a chart here in your assortment. Double click on that so it comes down here. And then you can select your bar style and your bar size. Maybe that's what it's looking for. That's the only thing I can think of. Rick asks, how can I get my red-green lines to show up better on my charts like yours do? Okay, if those are the background highlights I think you're referring to. You can make all those adjustments by going here to your indicators window And all the cosmetics for any of your indicators tend to be toward the bottom. So we're going to find the Raptor version 2.0. And then if you scroll down to the bottom, background opacity. If you have it set, you can read the little prompt here. If it's set at 0, it will turn it off. If it's set at 10, it's fully opaque. I've just kind of gone halfways here with number 4. All right, looks like the sellers are going to make another go of it. And, sorry, I'm a little bit slow on entering on that one. We got a macro pullback signal here. Here on the, little bit of a pullback on the eagle, a green bar sell into the hard edge. That's a fairly reliable signal. They are struggling a little bit here, aren't they, though? We're getting a little bit of a sideways range building up. And because the market has come down so far, it's going to be a little bit difficult stop placement wise. We may require a rather broader stop. All right, well, it looks like the buyers might be giving us that little bit of a pullback that we've been anticipating. Selling is going to be easier from the top end of this trading range. Okay, a couple counter trend opportunities. which is to be expected. Yeah, Rick says I've got crude oil January contract. That would be correct for crude oil. Crude oil has already rolled over. The December contract is expired. All the markets have their own rollover dates, so you need to find the rollover date for the market you're interested in. All right, well, here's a crossover buy. That's just a little itty-bitty pullback there on the Raptor. I would like to see a little bit more of a pullback. Something into the hard edge, perhaps. See how this number one cloud crossover, the clouds cross, or we get a little bit of a pullback, and then the market comes out and shows that it's going to continue with the trend. This is more what we want to see. This is just a little teeny tiny one. It's not to say it won't work out, it's just that. It's probably going to be more reliable if we wait for that pullback to happen. Because I'm not convinced the sellers are out of this. And we can see a little bit of additional selling coming into the market now, but best of the extreme. Keeping the stops back is going to be the tough part. All right, here's a number 2 signal to short. Now, because the trend is down today, I'm going to look at selling this. And as I mentioned before, the tough part here is going to be the stop placement. We're going to need a really wide stop to make this go, because I'm not sure if the sellers are ready to continue lower. So we got a little bit of a hesitation here around the median line. The high in the morning would probably, or pardon me, the low of the morning would probably be a little bit better. And ideally, if you could even risk it above the high of the day, that would be an ideal opening stop. So because the trend is down, I'm favoring selling signals over buying signals. Okay, so we hit the break even. Come on, don't flinch yet. Oh, so close. All right, well, if they come back here with yet another sell signal, we're going to get like a cloud cross. Okay, so we've got some follow-up signals here on the Hawk as well, on the Falcon. Just watching the Raptor here for a possible cloud crossover signal to develop again. You could interpret this as an early cloud crossover if you chose. Probably do the trade something like this. Well, we're getting tagged a few times here. And now we have the proper cloud crossover signal with the second push on the entry. Sorry, I'm trying to do too many things at once here. Mark making up for some lost time here. He says he took a couple late filter entry signals, got them both. First one, $400 all in, all out. And he says, I just took another one for 400 and I'm done. Now I don't feel so bad. All right, so you can see why a second push entry is helpful, especially if you find yourself kind of in the middle of a trading range, because the market can obviously go either way from here. All right, we're just going to cancel that for now. another cloud crossover, and another chance at a second push entry. So we're getting a few indications. Maybe the sellers are going to try to regain the trend here. We're making some higher swing lows, which is bad for a short. Rick, I would totally agree with your comment here. Rick says, I heard something interesting from a pro trader on YouTube. He said, sometimes you look at a sideways situation as market accumulation and a precursor for a big market push. But I think it takes experience to see that. A good thing to think about, maybe. It's not as difficult to spot as you might think. Let's go here, say to the eagle, because it's just going to condense things a little bit. The market is always in one of two phases. It is either trending or it is not trending. I know that seems overly simplistic, but really that's about all there is to it. It's either going to trend or it's not trending. The trending part is fairly easy to spot. It gets a little bit more difficult when the market first makes a wild breakout, as what we saw this morning, except to the short side. Wild breakout to the short side. Somewhere through here, the market is going to have a little bit of a pullback, and it's going to develop into more of a trading channel. We've all seen these. You know, the market goes from that initial really quick move, and then it develops into a trading channel. That will be our trend. So what I'm waiting for right now actually is this point right here, where it looks like the top of the trading channel is in, and I'll have a chance to sell. All right? Once the market is in a trading channel type formation, there will come a point in the life of the trend where all of a sudden these pullbacks, one of these pullbacks will start to get a little bit deeper, and all of a sudden the tops will start to get a little bit shorter, and then the bottoms will start to hold and the tops will start to hold. Well, now you know you're in a sideways period, and the question now becomes, is this just a pause, or is this truly accumulation? In trading, we have two different words for these types of formations. If it comes after an uptrend, it's accumulation. If it comes after a downtrend, or pardon me, after a downtrend, it's called accumulation. After an uptrend, it's called distribution. Because what happens is the market distributes itself and then it eventually heads lower. So, like I said, it's not always that difficult to spot, but yeah, you're right. It's a good thing to keep in the back of your mind. What phase is the market in? So obviously we had a little bit of distribution going on here this morning, then the quick move lower, and now the question becomes, is this just a pause, and is the market going to develop now into a big sideways trading range, or trading channel, I should say, with this area here being this zone right here? Or is this becoming a accumulation phase, and now the market going to rally from here? we are making higher lows, so it is possible. But that's why I said the only really safe way to know is to actually let that market make the breakout and then look for the retest and look for that chance to get back into the market on the retest. That will show you that the market is truly prepared to stay outside of the trading range. So long as it's within this trading range, you won't really know. And again, it boils down to being patient with the market, and that's something that is a lot easier said than done. Rick is asking, where can I find this video? It will be at the Indicator Warehouse YouTube site in just a moment here. I will get you that information. So if you go to, oh darn, just when I look away. So if you go, oops, no, sorry, we don't want Indicator Warehouse, we want YouTube. YouTube.com, and you want to go, then you want to search Indicator Warehouse, and stop it. There it is, Indicator Warehouse. The very first listing will be the channel. If you're not currently subscribed, then certainly subscribe to it. And the daily posting is usually up there within a few hours, certainly no longer than the next day. So yeah, just make a note of today's date, December the 4th, and you can reference it as often as you need to. Okay, so the buyers, or pardon me, the seller's making another poke lower, and it hit its profit objective, but I think we're running out of steam. We're about a little over an hour into the session, and this is typically, if there's going to be a little bit of a reversal, this is the time it's going to happen. Had a great day so far, though. I don't think I'm too keen on doing anything stupid. Great comment here from Peter. Peter writes, good morning, Eric. Well, good morning, Peter. This weekend, I looked at my journal and saw something interesting. if I was willing to lose $200 on each trade, I actually had a better win ratio. Seems I was getting out too early with a stop loss of only $120. First off, Peter, kudos to you for keeping a trading journal. If you guys aren't keeping a trading journal, it is the single best thing you can do to increase your success as a trader. If you are truly committed to making this a living, or at least being successful as a trader, you need to keep a trading journal. It's really as simple as that. If it's going to be anything more than a hobby or a mild amusement, a rather expensive amusement at that, keep a trading journal. And Peter, see, by keeping a trading journal, you learn things about yourself. You learn things about your trades. As Peter discovered, he was strangling his trades. He was getting stopped out prematurely. I know you guys see me run these great big stops all the time, and you don't, I can tell you all day long that you should not keep your stops ultra tight. At least not initially. You should hold that stop back as far as you can possibly afford. But like I said, I can tell you all day long it won't make a difference. But when you discover it for yourself, it will make a difference. I like to think of the initial stop really just as a safety net. That's my parachute. If the world comes unstuck, that's the most I'm going to lose on a trade. And ideally, it will be an amount that's not going to devastate my trading account. Scott says, Strangler, I'll send him a Strangler Club membership card. Yes, there's a few of us. And it's one of these things, like I said, you pretty much have to learn it for yourself. I can tell you all day long. I remember when a good broker friend of mine scolded me and said, Eric, you're strangling your trades. Don't keep your stops so tight. Did I believe him? Nope. Cost me a lot more money before I finally figured out he was right. And I had to give the trade at least a chance to get into profit before it stopped me out. There are electronic journals that you can have. Indicator Warehouse has actually a little tool called Journal Link that will sync you with Journal Link. It's just like this, and it will sync you with TraderView, which is an automated trade tracking website. This is TraderView. But even if you use a website like TraderView, I believe you should still keep a handwritten journal. Just get yourself a little spiral notebook and a pen or pencil and write down not only the parameters of the trade, but more importantly, the reasons you took the trade. Because that's where you're going to learn a lot. Once you identify the reasons you had for getting in and out of a trade. And sometimes you're going to learn more from those losing trades than you will from those winning trades, so don't be afraid to record those either. right, so it looks now like we have a little bit of that trading range that I was talking about. So if you're inclined to draw trend lines, you can certainly shoot a trend line in there, maybe even transfer it toward this end, and voila, now you have a trading channel. The idea behind a trading channel is just, it shows you the likelihood of where the market is probably going to reverse, both on the upside and on the short side. So if you're looking for a short signal, like this signal here on the eagle, or any of the follow-up signals on the other birds, you can be, and you're looking to hold, you'd be looking to hold somewhere down here, which is a rather ambitious target. This is getting back down toward Friday's lows. But it is looking like that's a very distinct possibility here. Let's just work it. Can I cover the trade up there? Oh, look at that. Can't cover the trade. All right, so I'm going to have to punch in if I get the signal. And we're going to have to trail this stop at least a little bit further back. I'll run it back here to the hard edge at least. And what I'll do is I will extend my profit target, and all I'm doing is sort of eyeballing. If the market falls down, where is it coming down to? Around 62.60, and Friday's lows were, sorry if I'm making you dizzy, Friday's lows were right here around 62.7. Oh no, they weren't. They're way down here. Way down here, 62.45. So 62.60, not an unreasonable objective. And let's see if we have any support and resistance zones in that neighborhood. I can further refine it. So 62.37.5 looks like it's going to be a feasible target. And I've got 62. Oh, I said 37, not that it matters. I just got tagged at break even. But you get the idea. You get the idea of how you can use these trend lines to help with your timing. And to give you an idea as to where the market might go to next. And very often in a trending market, it really is as simple as that. It's just a matter of waiting, which once again, we're not usually too good at. All right, gang, we are getting close to the lunch hour, so look for the market to get a little bit slower here, maybe a little bit choppier. A retrace would not be out of the question. Yeah, Elmer says you could also use a wide regression channel, which is essentially the same thing. All right, gang, good start to the week. I'll see you again tomorrow morning. Bye for now.